Good morning, everyone, and thank you for joining us today. I'm Aman Virk. I'm an industry advisor here at VASS. I've been here for around 7 months, and I'm super excited today to be talking about a subject which is very close to my heart, the advice gap. It's a well-known issue. It's been a topic under discussion for many years. And the fact that only 8 to 9% of people in the UK are receiving financial advice compared to 35 to 40% in the UK highlights how big the gap here is in the UK. We know the stats, we know the gaps, but there is also an impact. Could we just move the slides to the next slide, please? Thank you. And the next one. We've got some data points here which just highlight the challenge. I think one of the key things for me is that where people do take financial advice, 84% of them are benefiting both emotionally and physically from receiving that advice. So there's clearly a well-being impact. I think if you look longer term, we've got some great data points around pensions. According to the FCA, 38% of the UK working population are under saving for retirement, which really highlights the impact that the gap can have. And 16% of UK pensioners are living in relative poverty. There's also a demand. People are willing to pay additional money to get sort of like a more detailed guidance or specific guidance for themselves. 46% of consumers are saying that they would pay more to get information and guidance which is relevant to them and their specific needs. So we know there is a gap, we know the stats, but today we're not here to discuss how big the problem is. We're here to talk about how we move the dial on the issue. And as much as it's a huge challenge, there's also a huge opportunity. And I think real need now for actionable solutions to move and close that gap. Whether you're a provider, a tech innovator, regulator, or a practitioner, each one of us has a role to play in shifting that needle. So today what we'll do is look at not only the regulatory framework, but also things like technology, culture, talent and skills gap to see where we can move that dial. So I'm super excited to be joined today and very lucky to be joined by Emma Napier, our guest speaker. Emma is a consulting director at Next Wealth and brings over 20 years of experience in the UK financial services sector. She's a leading voice on the intersection of financial advice and technology and a particular focus on improving access and outcomes for clients. Super, super grateful to have you here today, Emma. Welcome.
You. What a lovely welcome. Also lovely that you said only 20 years in the industry, because I think that's very kind of you to say that. It's a lot more than that. And every time that I look at my bio or I write an article or something, somebody says, yeah, it's not 20 years, it's more like 35, which makes me feel super old. But thank you, Aman, and the VASS team for asking me. I could talk about these subjects all day.
I think I said over 20 years, but I think, sort of like, I think between us, we've probably got about 35 years experience. Sorry, Duncan, can I just ask you to go on mute, please? We can hear your background noise. Thank you. Yeah. Between us, we've got decades of experience, which is fine. Okay, shall we dive straight in? I think before we look at sort of what steps organisations can take to close the advice gap, I think it's really important sometimes to step back and particularly look at the regulatory landscape. There's been quite a lot of movement in recent years. We've seen consumer duty from the FCA, and recently we've seen FCA's advice guidance boundary review, which is a significant development in this area. I, for one, really welcome regulatory input because I think it helps shape what good looks like, but also, the direction that we're going in. So I think it'd be really great if you could share your thoughts on the focus of the FCA's review and how firms should be preparing for these changes. Also, does it feel different to attempts that they've made before?
I think so. I've got my positive pants on in terms of consumer duty, and I think that the reason I say that is because, yes, I think for the first time, it feels like for me, the regulator has set up a piece of regulation that just makes sense. So consumer duty always pins back to an end customer. So you are looking after the consumer that is buying your product, buying your advice, or receiving that that advice that they need. And I think if in any business, it doesn't matter whether it's financial services or not, if you can always focus your business on your end client and you get that right, then that's a good thing. So I think for us in financial services, we've been inundated over the years with all sorts of regulation like A-Day and pensions bills and the RMAR and all of the things that that advisors and businesses in our industry have to cope with. And you know, it kind of goes off here and it goes off there and it goes off there, and nobody really ever makes, or it doesn't seem that that the industry takes a massive leap forward, and particularly around advice. So you mentioned there, Aman, about the advice gap, and we've been talking about an advice gap for years. There's always been this advice gap, and it's now a thing and a term. But actually, when you think about regulation and consumer duty, this is just hoping that a professional industry can lift itself up to be able to deliver advice to, you know, you shared some stats there, the amount of end consumers that are looking for advice along their kind of financial lives, and that's really important. So I think in terms of regulation with consumer duty, I think this is a good one. I think that consumer duty makes sense. I think that the number of advice firms, large ones, small ones, consolidators, all sorts of advice firms have sat up and looked internally at their own processes and how they in turn think about consumer duty. And there are some changes. So I got my positive pants on, and I think that consumer duty is a good thing.
Yeah, I think what I found was it's probably one of the first regulations which was explicitly, I mean, we've tried before with conduct risk, for example, and it was risk management, but it actually really does place a bigger emphasis on proactive support as opposed to reactive. So it's not just waiting for something to go wrong and fixing the issue. It's about really anticipating what could go wrong and supporting customers through it. And I think that for me was a really, really big shift. And I think that plays equally into the advice gap. It's how do we anticipate what could happen and the support that customers will need. And I think certainly the pandemic brought a lot of this to play, where people who were financially comfortable, very financially comfortable, or thinking that they were in a really good financial place, then experienced some unexpected changes in circumstances, whether that was losing a job or increased cost of living, and found themselves then in financial detriment or struggling financially, which really for me then played into, you know, how do we plan for financial goals, and that's where the advice gap really comes into play.
Yeah.
I forgot to say that there is an opportunity to throw in questions as we're speaking, because the chat is open. So please do feel free to ask questions as you go along. We will be looking at Q&A at the end, but you know, we will try and cover some of the questions as we go as well. Okay, so looking at the FCA's advice guidance boundary review, what would you say is one of the key elements that comes out of there that's different to what we've had already?
I think there's a few things. So the advice guidance boundary review is clearly to address what can the industry do. So that is, it's a message to the industry to say, how are we as an industry going to solve the this growing advice gap? So I think it's for the FCA will say it's for the industry to solve. You know, we are not going to dictate how you should facilitate advice, and we're not going to dictate what you charge for that advice, but we would like the industry to come up with ways to be able to address that advice gap, and that's the industry to decide. So there's all sorts of messages, whether it's targeted support or simplified advice. You know, what does that mean? And I think that we could do a bit better with the sort of request to the industry to come up with a really good idea as to how we could serve more clients, because there's some fundamental sort of issues or challenges that advice firms all have in terms of how they react to that, because not everyone is equipped to be able to just change their proposition and just go, right, okay, you know, we've got 500 clients at the moment. We know that there's this big gap over there and they're all willing to have advice, so let's all go after them. Because what Consumer Duty has done, rightly or wrongly, has, as I mentioned earlier, has made firms think about propositionally what they're offering. So
Yeah.
one of the unintended consequences of Consumer Duty has actually added to the advice gap, not we've gone the wrong way in terms of some firms have looked internally and they're increasing their sort of lowest asset level of client that comes through the door because of one reason or another, which I'm sure we'll get into. But that's not ideal from where the advice guidance boundary has been set, because what they're trying to do is they're trying to say, well, look, there's more people that need advice, so can you do more at a lower cost, or can you reach a different demographic of client? And there's just that kind of battle between the people that are doing it saying, well, actually I can't, because I need to think about profitability and I need to think about how I support that advice, and then, you know, how can I take on more clients when I've got all of those sorts of things. So there's a bit of a battle going on. Just on the AGBR stuff, I do think that targeted support and you know, it's a great idea, and we will get there. I'm not sure whether any, well, no, I'm not saying any advice firm, but I'm not sure that that responsibility lies with the current advice firms that
Yeah.
we have, that we're used to. I'm Because the support and the extra support that the FCA are looking for is kind of what can you do more of, that doesn't necessarily equate to you know, a pound. So what can you do that's going to give somebody some financial education or get them on a journey, and how can you support them with it being guidance, not advice? And the advice industry get a bit worried, because obviously they're on the hook for if it all goes wrong, because it has to be within the bounds of governance and compliance and things like that. So there's some work to be done.
There's a lot to navigate, and I think the FCA
Yeah.
recognises that there's got to be some changes in the regulatory framework as well in order to enable targeted support, and also I think move away, because I've seen, I think, a fear in the industry to cross that boundary. You know, there is more you can do with guidance, but there's also that fear to cross it just in case they step into advice, and then they get caught up in some of the regulatory requirements. So, okay, I think you know, we know what the regulatory landscape is looking like. We know that there's going to be more changes. The FCA are very explicit in terms of their plan, and they've started with pensions, and they're moving, you know, further down the line with this. But I guess for us, it's what can we do now, right now, in order to set ourselves up for success, but also to try and move that dial. So I think, you know, as a starting point, and obviously now working for a technology company, technology plays a key part in this. What are some of the things that firms can start thinking about right now in terms of particularly releasing, I guess, financial advisor time to enable them to service more customers? And are you seeing any good examples in the industry of firms that are doing this well?
Yes, we are. So at Next Wealth, we cover this in detail. We look at the tech that advisors are using within their businesses in all different areas. So that covers things like those advisors that are vertically integrated. You know, how are they mapping through the whole advice journey, and, you know, kind of going from one to the other and making sure that the efficiencies and profitabilities are there by just owning and controlling the technology experience all in one kind of box. We also do a lot of work on those firms that are looking to achieve that sort of efficiency and profitability better, so that they can reach more clients. And that is things like we have an AI lab, for instance, where firms come in and they show us and they showcase, you know, how they've been able to use AI, for instance, with things like meeting notes or onboarding a client, or how can that help with my annual reviews, and all of those sorts of things that just speed up some of the process that advisors are going through. So AI is a developing area of tech. But we've also seen other areas, depending on the size of the firm. You've got firms that are going looking at sort of hybrid models as well, and you've got so it's where technology can support some of the advice journey, but not all of the advice journey. We did some work a little while ago where we asked end consumers, you know, how do you want to look in an advisor's eyes versus are you happy to just kind of type a few things in and for us to gather some data? And it's very relevant that most end clients are, unless they're experienced investors, are never going to go through the whole journey themselves online. They want a point in time to be able to pick the phone up or speak to an advisor just to say, look, I think I know what I'm talking about. I think I know what that platform is and that fund is, and I think that's the journey I want to go on, but can you just kind of give me a bit of a sense check? And that hasn't gone away. So there's some hybrid models emerging as well. And it really depends on on the firms themselves and what their intentions are in terms of growth as well. And I'm sure we'll come on to that later as well.
Do you think hybrid models are going to be unavoidable moving forward? Because I think with the demand for digital tools, I mean, you know, consumer behavior is shifting massively. A lot of people like to self-service. They like, you know, there is that element of I want to try and serve myself up to a certain point, and then I want to speak to an advisor when it gets complex or, you know, it gets a bit more detailed. Do you think this is going to be unavoidable? We have to move into that direction at some point.
Do I think it's unavoidable? I think yes, it is unavoidable, but I don't think it's unavoidable for the wrong reasons. I think it's just the way that we live. Our society lives in a digital world now. You know, there's so much, you know, we always talk about shopping, well, I always talk about shopping. You know, I didn't ever think that I would be bothered about not looking at the fruit that I'm putting in my basket every week and stuff like that, but I don't do that now. So I think it's unavoidable because that's just how we live. I also think that we are going through a growth phase in terms of the advisor community that are also transitioning to a digital world, because historically it was very hands-on. You would, you know, get in your car and you would drive to a client's house and you'd spend a couple of hours there, and you would, you know, part of your service wouldn't necessarily be the end result of where you should invest your money and how you should save. It was all the relationship side of what advice meant. And that is becoming less and less in favor of technology, because clients, the end clients, are used to, you know, why would you drive 2 hours? Don't worry about that. I'll upload all my latest statements, you know, as long as I can make sense of it. I'm happy to do that. But I would like you to tell me which button to press when I am ready to press it.
So it's that balance between using AI and digital tools and that human connection, I think, and maintaining that balance over time. Yeah, because I think wealth management in particular, there's the need for this building strong client relationships, and I think the connection still has to stay. So yeah, okay. Okay, so we've touched on technology, we've touched on business models as well, and the hybrid tiered services. I think the other big area of challenge I'm hearing from across the industry is the skills gap and the talent gap. Are there enough financial advisors out there to actually service a bigger market? if we want to expand the advice, sort of like available to sort of like customers, have we got enough financial advisors and skills to enable to do that? Now, I think we know that there is a skills gap across financial services, but what are the steps that maybe firms can start thinking about taking right now in terms of filling that gap, rather than waiting for the next generation of advisors to come through?
A few things. So I think that that skills gap, I'm not sure it's a skills gap. I just think it's a different business model where advisors are concerned, because you have regulated advisors that have done all of their exams and they are the regulated entity in terms of delivering that advice. But what we're seeing at Next Wealth is that a lot of firms are just readjusting their business models. So for instance, you'll have people on the phone and you'll be able to answer, and they're able to answer some immediate questions, can you just tell me where this is? Or could you just tell me if I did that? That doesn't necessarily constitute as advice. So I've seen a number of firms, particularly larger ones, that are having sort of central teams that are able to support part of the advice journey without it being advice. So I think, yes, we don't have enough financial advisors, because as quick as they're coming in, they're also, advisors are retiring as well. So it's kind of, over the last few years, the number of advisors, I think it's like 5,000, have remained quite flat, which doesn't mean we're going the wrong way, but we're not increasing the number of advisors. But what we are seeing is that business models are changing. People are thinking about academies, which they have done in the big firms for quite some time, but there's other one of the companies that I'm involved with as a non-exec is the Verve Group, and they've got a foundation. So they've got a charitable foundation where they're encouraging people to come into our industry, where they wrap their arms around them and help them get through their exams, and that can be things like second jobbers and people like that. So there are incentives and around, and businesses that are really encouraging school leavers and going into schools early, whether it's sort of financial education, but also, what do you want to be? Do you want to be a financial advisor? Oh no, that's something my parents do, and it all looks quite boring. Well, some of the younger advisors that I've seen, they've got accounts on TikTok, and they're doing, updates every week on TikTok. And that's different, and that's what we need. We need a different demographic of client to want to take financial advice, and that has to mean different new advisors using different methods to reach those clients as well.
I
Sorry,
think,
I went off on one a bit.
No, and you know what, we joke around on TikTok, but I do think a lot of people are learning a lot from social media channels. I see a lot of TikTokers who are out there who actually are giving some really sound savings guidance to people, and people are learning. I mean, I've got a 16-year-old nephew who started investing, quite early on, because he's watching these videos. Safe investment, obviously, his parents have got their arms wrapped around it all, but really interesting, because at 16 I would never have even thought of doing anything like that. So I think that the access to information is important. So I like the idea that you touch on academies, you touch on maybe partnerships with. I mean, I see some of the bigger organisations partnering with universities to really nurture some of this talent, and also make it an interesting, like you said, an interesting space to develop a career, which is great. What about internally? Is there more that firms can do internally to develop talent?
I think they are. Again, I think it's the business model. So in terms of the people in your business, I've seen a number of people thinking about, if we're using AI to produce a suitability letter, what do we do with our paraplanners? And I think the roles within an advice business are becoming different. So just because you've got a piece of technology supporting part of the advice journey doesn't mean that particular role becomes redundant. It just becomes a bit different. You've got various different tools and digital pieces of technology that talk about risk, for instance. And that doesn't mean that a client, just because a client goes through a digital journey to reach their risk profile, understands it. So you've got other people that are explaining what risk means. They're not giving advice, but they're saying this is what it means in natural language, and able to answer questions on it. That's a different role. So I think that's the job that firms are thinking about in terms of how they're delivering advice, and those that are looking to grow, how they're going to do that. And is it different language? Is it different use of tools? Is it partly technology, but partly that human touch? How often do I get in touch with the client? How often do I follow up afterwards as well? Is everything okay? Has anything happened? Do you want to talk about anything? That relationship behavioral side of financial services with advice is definitely changing for the better. And I think that's how we grow more talent to be interested in doing what we do.
Yeah. So going a bit deeper, I guess, into and I suppose people's finances are getting more complex as well. They're not as they used to be, so that shifts as well. Yeah.
And you've got, sorry, just one more thing on that. You've got firms that are evolving that aren't just financial advice firms either. They might do tax, or they might do mortgages, or their protection, or there might be some accountancy. And so you've got sort of vertical integration, but you've also got horizontal as well, all to do with finance.
Yeah, that's a really good point. I think staying on the same theme, we're seeing kind of emergence of financial coaching. I've seen Octopus Money, for example, launching a financial coaching platform. What are your thoughts on, sort of like this new development, and is this the alternative to more accessible advice for the mass market?
I think it's a really good start. And I think, Octopus Money have had a great success. I was with someone yesterday who said that their experience of that particular way of engaging with consumers really makes a difference. I do think that the area that is likely to get the most benefit from coaching is things like workplace schemes, because I think that you're kind of halfway in the door because of auto enrollment. So it doesn't matter what age the end client is that you're talking to in a workplace environment, they've been enrolled in a pension. They could be 18 years old and they've got a pension. They might not think they're interested in it, but to just engage that financial coaching, providing some support, asking the right questions. And of course, that's where technology comes in with a few nudges here and there, throughout the sort of the working life of an individual, is where we'll see probably the most impact from things like financial coaching. Also, we have to think about the sort of demographic of client, and the requests that they've got. So someone at the later in life that's thinking about, do they take all their pension pot out? Do they go around the world? Do they buy the yacht? Or actually, do they leave some invested? Do they buy an annuity? Do they leave it under the bed? All of those sorts of things perhaps isn't digitalized, but there's an awful lot of clients, as I say, with that financial coaching that can kind of, I don't need you to come around my house. I can quite easily touch base with you online, but just to know that you're sending me a newsletter, or what it means in terms of, my behaviors versus my peers, all that kind of stuff is starting to emerge, and I think it's great.
I think maybe we can talk a bit more about the financial education piece, because my values around money come from my parents. My dad was very, very good with money. I think when I look back, he was the sole income provider for the house, and we were comfortable. He didn't earn a huge amount of money, but he always managed his money well. But he never spent beyond his means. He was quite risk averse when it came to investments. It'd be things like work share schemes as opposed to going out and really getting onto the market, etc. But it worked for him, and it worked for us as a family. But I learned a lot of my values around money from him. To save money, I am quite risk adverse, and that's where I got sort of like a lot of my values from. Now, the world is changing. There's so much opportunity to spend money out there, and I think because we are literally sort of like inundated with products and consumer products continuously. Are people managing their money better or worse than before? Probably there's a good discussion point there. And how do we educate people in terms of they're earning more, they're spending more? How do we educate them in a way that they understand in terms of balancing the budget and the savings? And there's some quite creative tools evolving, particularly in the fintech space, like Clio, where you've got budgeting tools which enable you to really look at your finances and manage them. But is there something here, in terms of really reaching that mass market through innovative strategies and technology? And what are your thoughts on that?
I think getting in the door is the first step. So if you can engage with a different set of customers that aren't your customers, they haven't been your customers for years. If you can work out a strategy to engage somebody to come to your website, or somebody to come to an event, or somebody that knows somebody that's had some advice, getting them in the door is the first step. And I think technology will help that. Of course it will, because everyone's using technology. And I was at a conference about, I don't know, 3 years ago. It was a financial services conference, and Stephen Bartlett, the Dragon's Den guy. And it was before he went on Dragon's Den. He was the guest speaker. I'd never heard of him before, but he was like 26, and he was sat in front of a room full of financial advisors. And he said, let me just tell you, room full of financial advisors that were all sitting there like that. How are you going to make me feel that I want to talk to you? Because you've probably got that 20 seconds to come in via my phone, because I don't do anything else. I don't talk to people. I just do things via my phone. How are you going to engage me that I'm going to come to you and impart all of my kind of wishes and thoughts, and you're going to make me feel better about my long-term savings or whatever? And it was so in your face with at this particular seminar, that I was just like, whoa, one, that was really brave, but two, 3 years later, I'm still thinking about it, because I'm not sure we've got that there yet. Because as an industry, we talk about tools, we talk about services, we talk about advice gap and all of the problems. But I don't think we've cracked it yet to be more engaging as an industry. And I think that's what we need to do. So I think if we can just encourage people to join us as an industry, so the new talent that we spoke about, if we can make it easy and simple, so that someone says, oh, okay, I am going to buy that house, but in order to buy that house, it's better perhaps that I invest for 5 years. And what does that mean? Okay, so risk. Okay, what does that mean? Will I get there quicker? Will I not get there quicker? And that's all financial advice. But we tend to sit behind a process a lot of the time. The client walks in the door, they complete a fact find, they then complete a risk questionnaire, and then there's a product at the end of it. I think we've got to get better at the relationship side, and I think if we can do that early on, then that's how we engage more of a, why wouldn't you come to a financial advisor at any age of your life, and just kind of fall in love with it again.
Yeah, and I think when I look at maybe sort of like when you look at US, for example, they I think their way of managing money and their attitude towards financial advice is more open, and maybe that is something that
Yeah.
is encouraged at an earlier stage. It's okay to go and ask for help, but then the models have to reflect it because it goes back to affordability, complexity. Right now, what we have is you go and have a holistic review of everything, and it costs a fortune to do it, as opposed to I have this particular area that I want guidance on or advice on. Can you help me? And actually, I think I'm okay managing the rest of this because, I have more confidence in this area. So I think those models, that overlapping of the models, I think is going to be really, really crucial and key.
Yeah, and we are starting to see some, so there's models, which I think is absolutely right, but there's also fees. And we did a piece of work literally about a month ago on the fees that clients pay for advice, and that's changing too. It always used to be percentage of assets. That's what you would pay your financial advisor for that advice. I'm not sure anybody that hadn't taken advice before would understand that. They would if they were explained it, but they'd probably go, well, I kind of want to get to the place where I've got an asset pool, and then you charge from there. But what we're seeing is a number of people that want to, and particularly younger people that want just a fixed fee. They want to say, right, 500 quid, what's that going to give me? It will put me on a journey, which then I can go away for 5 years and carry on doing myself. And that's where we get that hybrid. That's where we get the technology. But the fee structures are changing as well. And it's across the board, people are starting to think about the fee structures as well, which I think is really relevant.
I think your point earlier as well is, um, you know, uh, stepping into the shoes of the newer customer base and the demographics, I think is really important. We've seen that happening in the banking sector with the likes of Revolut, Monzo, Starling. They've really gone and understood the customer base and then provided services that they know that customer base is looking for. And I think somebody actually said to me recently that WAM is at the crux of a reinvention, and I think they probably are. I think that we are stepping into that space much more driven by technology, driven by new models, and driven by customer demand.
Yeah.
Okay, so I'm mindful of time. We've still got about 15 minutes, but I think for me, sort of as we move towards closing the gap, it's probably essential for us to start tracking the progress and ensuring that we're making tangible improvements and making an impact. How can firms measure success and take practical steps to really sort of like evaluate the progress that they're making, particularly as the regulations evolve as well?
I think that we are in a period of transition. So I think that more people than I've ever spoken to before are starting to engage with the technology, whether it's AI or whether it's some form of technology that's engaging to their end client that also helps the business as well. So more people than ever. But I do think we're in a bit of a transition. Don't think we're there yet, but there's much more appetite from the advice community to want to be there. So we are changing. So what would be a measure of success? Well, the advice gap reduces would be the measure of success, I think is, and that is not my, I can't claim that one. The CEO of Schroders Personal Wealth said it at our conference last year. We were talking about kind of what exactly this subject. What can we do to shorten the perceived advice gap, and what is it? And how can we measure it? And he said, well, there's just one measure. More people take advice and they get value from that advice. And that really is the open door to the different models, the different charging structures, the way that we engage with all sorts of end clients who, as you said right at the start, Aman, the amount of clients that are looking for advice and need advice, like more than ever, probably. So I think that's the measure. But it's not going to happen overnight. So a number of firms are saying, right, okay, we're going to take the bull by the horns. We're going to invest in some technology. We are going to do it for perhaps a small part of our business, see how that goes, and then widen it out and do another bit, and then another bit, see how it goes, and just grow like that. I definitely don't think it's overnight. I don't think that targeted support and guidance and advice is the silver bullet. I think that it's a bit of everything.
Yeah, and I think keeping in mind and focus that this is all about supporting customers to make sound and confident financial decisions. I think that confidence in managing your finances is probably the key here. How confident are people? Could have a new NPS score, couldn't we here? Who knows?
Yeah.
Okay. I think as a wrap-up question, for firms looking to start taking their next steps, say today, what would you say is the one thing they can immediately start doing? What's the advice you'd give?
So I say this a lot, but it's really easy for me to say, right? So take it with a pinch if you want to. But I would just say be brave, because I think just be brave, try it. I think that
I love that.
well, maybe that's just be brave. But I think just going back to the regulation, I think the regulator has given us the tools to be brave. Now, whilst they have their foundations and you sit within the parameters of what good looks like, and obviously that's what good looks like for the end consumer, they're not saying, and you need to do this, and you need to do that, and it needs to be this, this, and this. They're not dictating what it needs to be. So they've set their principles. It's for the industry to have a go at. So why not have a go? I do think that more and more people are starting to do it. I'm not saying that everyone has, and there are some, quite a large majority, that are just kind of waiting to see what they do down the road. Then I'll do it. Let them make the mistakes, which is fine too. But there are more and more people that are starting to just go, right, sleeves rolled up. Let's see where we can get to. And I'm a massive advocate for that. So yeah.
I think for me, I'm quite excited to see where all of this goes, because I think the opportunities in this space are tremendous, and the impact it could have is huge as well. So it's very exciting. Now I'm looking. I don't think we've got any questions. I'll give people a few minutes if they want to drop anything into the chat. Now, in the meantime, what I'm going to do is just it's a high level summary slide, and it's wrapping up the steps that we've talked about today in terms of things that you can start thinking about. Like Emma said, be brave. I think taking that first step and trying something new as a firm will just help you move the dial, but also put you in a good position and a strong position for when regulations are formalized and finalized, because they're coming. The FCA are serious about the change, and they're clearly taking positive steps in the right direction. So it's a couple of things on this slide that you can start to think about. Scaling with technology. So how can you release some more advisor time to service more customers? Are there processes, things that they're doing, manual tasks that can be automated, which gives them more time then to focus on the advice that they should be providing to customers? Preparing for regulatory change, things like gap analysis. Where do you sit, in terms of gaps against the proposed consultation document and proposals that have been put forward by the FCA, but also really challenging yourselves in terms of the advice, the boundary between advice and guidance. Is there more that you could give in terms of information and support to customers right now, which enables them to make better informed decisions? Hybrid advisory models. Is there an opportunity there to provide more of a tiered service? I know this can be a bit daunting, particularly when it comes to costs and additional resources, but is there more that could be done in that space? And then building talent and considering financial coaching as an accessible alternative. We're seeing some creative things happening in the industry in this space. So again, an opportunity maybe to look into this, and is there more that you can do through partnerships or just enabling your teams better to then move the dial further. So we're seeing some good examples in the industry where people are stepping into this space. It's an exciting time, I think, for everyone. I certainly, I think it'd be great to do this maybe in another 5 years to see where I do think things will shift and they will change. So it's exciting for all of us to watch. Okay, any final thoughts, Emma, before we wrap up?
No, not really, but I think you did a good wrap up because wouldn't it be interesting to come back in 5 years? Because I think this world will be very, very different in terms of how we deliver advice. So you will get the bravery, it will be looped in with technology. There will be different ways and means of helping that big pool of people that are needing help. So that's why we all get up in the morning, isn't it? And look forward to when we get there. So thank you.
Yeah. And we will be placing this webinar on demand on the VASS website shortly. And so thank you very much for everyone who listened. It's been a pleasure to have you, especially you, Emma, on the webinar today. And thank you so much for your insights. But we're here to help, so please reach out if you need any support on your journeys.